Oh,
It's okay, it's okay.
Oh, no.
That's all that matters.
Madam Clerk, turns 5:45 and we call this Finance Advisory Committee meeting to order. The town of Aurora acknowledges that the Anishinaabe lands on which we live and work are the traditional and treaty territory of the Chippewas of Drakeena Island, as well as many other nations whose presence here continues to this day. As the closest First Nation community to Aurora, we recognize the special relationship the Chippewas have with the lands and waters of this territory. They are the water protectors and environmental stewards of these lands, and as a municipality, we join them in these responsibilities. We further acknowledge that Aurora is part of the treaty lands of the Mississaugas and Chippewas recognized through Treaty Number 13, as well as the Williams Treaties of 1923. Shared understanding of the rich cultural heritage that has existed for centuries and how our collective past brought us to where we are today will help us walk together into a better future. We had a motion to approve the agenda. Louise, Councillor Thompson, all those in favor? Opposed, that carries. Any declarations of pecuniary interest? Seeing none, a motion to receive the minutes from May 9th, 2023. Councillor Louise, Councillor Thompson, those questions, all those in favor? Opposed, that carries. No delegations. What matters for consideration? First one, we have a memo from Manager of Cultural Services regarding the Aurora Town Square budget update. Who wants to start? Bill?
Sure. Yeah, I can start. Thank you, Mr. Mayor. So what I'll do is I'll pull, yeah, we got the presentation. So we'll go through the presentation. This is basically more or less a sort of regurgitation of the report is with the agenda for tonight. So I'll just take a couple of minutes to get through that and then obviously open it up for questions and answers. I'm going to pull up my presentation as well. Okay, so thanks very much for including this on the agenda for tonight. It's obviously been a long time coming as far as the budget is concerned with Town Square, going back to the original financial plan of March 2019. We spent the last 3+ years kind of revising and reorganizing what the budget will look like. So tonight is sort of a summary of our thoughts on that. So just to sort of go down, we'll go to the next slide. Do a bit of a background. So March 2019, if you recall, the original business plan and the financial strategy was approved by council. At that time, the financial strategy included an incremental tax levy increase of $240,000 from 2019 to 2021. Until at that time, until we were going to reach $720,000 in 2022, and $720,000 was identified as the overall net investment the town would need to make into Town Square at that time. The financial strategy, I should note, was based on what was called the Municipal Services Board model, and before the entire scope of the project was finalized. The way the expenditures were calculated, again, the Municipal Service Board model it's a very novel approach to running specifically a performing arts center or community facility like Aurora Town Square. The only municipality that has tried it, and they're still sort of relatively early days, is St. Catharines. And so it's basically the creation of an independent board, that would have sort of a dotted line to council, similar to the cultural center, but in a different kind of, in a different vein. The way that the consultants, Intercom, calculated the expenditures at the time was by aggregating the town's funding, the base funding for the cultural center, the museum, which of course is a town entity, as well as the facility maintenance budgets, both for the library, we're a public library, as well as 22 Church Street. In addition, they also identified additional funding that would be needed because, of course, the new facility would need more facility maintenance. We need more programming budget because we have a new performance hall and new opportunities to expand programming to the visual art studio, as well as the other programming spaces there. And then, of course, the corresponding staffing that would be responsible for running the space, the programs, and doing the maintenance. So under this model, as I mentioned, the newly established MSB would be the recipient of all the revenue. So that would include the rentals, program registration, sponsorship, ticket sales, as well as staff recoveries. So after an in-depth governance review, I began in July of 2019. So that review took a few months. At that point, we made a recommendation to council that rather than go through with the MSB model, which seemed to have its, a few deficiencies It didn't really stand sort of the test of a sort of in-depth governance review. We brought another approach to council, and that was the not-for-profit municipal hybrid model. And that was essentially taking, the expertise of the cultural center, the museum, the public library, as well as, what the town has internally as far as financial management, facility management, bookings and rentals. And we put a new model forward to council, which they approved in June of 2020. Under this model, the town would be responsible for facility maintenance, IT, bookings and rentals, box office admin, and some programming. And the way that we approach programming is that we would provide programming that was complementary but not in conflict or didn't duplicate what was being offered either by the library or by the cultural center. Under this model as well, the cultural center will continue to provide their base programming, which is focused again on performing arts, visual arts, the same thing that they've been offering, since they were established a number of years ago. And there was also an opportunity under this model for the cultural center to expand their services. And we identified two areas of expansion, which we thought would be, complementary to their skill set. One of them was running the front of house. So those are the people that do the frontline customer service on the night of a performance. They take your ticket, they sit you down, they make sure that you have a good customer experience. And then, of course, the technical production services. So running the AV, the lights, all those different things that the bells and whistles in the new performance space. Under this model, facility maintenance expenditures were higher. So the transition from the MSB model to the not-for-profit model saw higher expenditures on facility maintenance. Partly or predominantly that was due to the fact that we added, subsequent to March of 2019, there was an additional 10,000 square feet and more added to the project. So that included the bridge, there was the water feature outside, the skating loop as well, and then all the library improvements, which included the facade, elevator, new programming rooms, the boardroom and reading garden. And then, of course, the compounding budget impacts. COVID certainly played an impact. We're seeing that, particularly with programming for performing arts in particular, where audiences are still coming back. So those were kind of influential on the revenue projections that we put together. And of course, inflation has been a big thing for the last year plus. So what we did with those revenue projections is we refined. Oh, I'm sorry. I moved on. I didn't ask you. Thank you. And the revenue projections were refined and separated again based on that transition from the MSB to the hybrid model. So in 2024, which we are envisioning will be year one of Town Square operations, what we're anticipating is that both the expenses, yes. Thank you. You keep me under control there. So in 2024, with the opening of the facility, we expect that expenditures for salaries and benefits, of course, marketing, communications, programming, facility maintenance, they're all going to increase as we become operational. We've done quite well since 2019, or since we started implementing that 240K, that we haven't spent up until this year. This will be the first year we actually spent all of the 720. So we've been able to set aside a significant amount over the last 3 years into the tax stabilization reserve. There will be a gradual increase in the number of programs, performances, rentals. And so what we're hoping is that we anticipate, if we look at Town Square like a startup business, we anticipate between 2024 and 2026, that'll be our startup year. And we hope to reach capacity in terms of a programming and rental capacity perspective by 2026. This also allows us to do an incremental onboarding of staff. So what we're hoping to do is we want to run with the staff org chart that's listed in the report. But we also want to be able to say that if there is a demand for a new program, we can justify it from a business planning perspective, that there'll be revenue from program registration that will come to council if need be to ask for additional staff at a cost recovery basis. Next slide, please. I won't go through all of this, but this is what we are proposing as a Town Square staffing complement by 2025. You can see the different positions. Many of them are existing positions. Some of them will be added on to the org chart as required. I'd also point out that in addition to what is coming from the Town Square budget, there's also 2.5 full-time equivalents that are funded by the museum. That's our museum staff, as well as the cultural development coordinator. He'll be doing a lot of programming, education programming in particular at Town Square. And the library has allocated one of their FTEs to support the AV and tech requirements at Town Square as well. Next slide, please. So based on all of the reassessment of the budget, what we're proposing is that the new net annual operating cost for Town Square will be $1,070,000. I would point out, as many of you know, and it's indicated in the report, that this does not include the ACC's requirements. And what we are recommending, based on feedback from the financial staff, is that we do a similar phasing in of the additional operating dollars to limit the budget impact. So we're saying we'll incrementally increase that $350,000 over 3 years. So that will be fully funded by 2026. And any funding shortfalls will be taken from that tax rate stabilization reserve. And as I mentioned, there's been a number of significant contribution that we've made from the town square operating dollars that has been unspent over the last couple of years. Next slide, please. And finally, I would just point out that this is in the report, so I don't need to go through it. But it does show you how we've come up with that net incremental funding requirement of $350,000, which again is over and above the $720,000 that was approved in March of 2019. And that, Mr. Mayor, and is the report, and happy to answer any questions you might have.
Did you want to add anything? Just wait for questions.
Let me just wait for questions at this point. Covers generally where we're at, but feedback or comments.
Before I ask you guys questions, if I can get someone to move and second the recommendation. That's awesome. Yes. Mike.
I'll go. And I had already emailed Phil in advance just to give him a sort of a heads up. I think, motion really is just about incorporating any comments that the committee may have or council. But you make reference to the intercom business plan that was presented to council. I think, as I said in my email, I think that it would be helpful not just for me, but for public and for members of council. To try and provide a little bit more explanation. Some of you touched in your commentary, but to put it in the report, to show twists and turns along the way between that budget plan and one you're being proposing. Because as I identified in my company, there's some notable differences, be it on the expenditure side or revenue side, and by providing that additional detail and commentary, I think that gets out ahead of some of the questions that council may have. Whoever, and helps better understand things. I still think it's necessary for me and others to get a sense of the whole picture. And so while the report doesn't touch on the ACC or library or whoever else is going to be, somehow integrated, involved, and or asking for money, at the end of the day, I'd like to know the whole picture, and not just what the incremental increase may be town's perspective, but many of the other cultural partners organizations involved. While know that it's always going to be a best guess scenario, especially in the initial first couple of years, I like the way you kind of position it, where you're being conservative in some of those estimates, because I don't want to be overly optimistic, because then you end up with a shortfall. If you're conservative and the place is more successful, that just means more dollars in the bottom line, and that's certainly how we approach my job. And so I just think that it's a good start, but there's some dotted lines, some additional information to look at the two pieces, because most of us on council in 2019, and that's inevitably what we're going to look back to, and we're going to want to be able to understand the differences. I would also hope perhaps to put it out to those that may have those questions too, to sit down with staff and go through it, because you're right. I mean, it was predicated on one model, it changed the model, COVID's happened, time's elapsed. There's a lot of little ifs or buts there as well. But I think in this case, more detailed better.
No, that's fine, absolutely. I think as we prepare and get ready for council report, some of the extra detail can be added into the council report to supplement some of that information, but having additional conversations or those type of questions. I think so.
Yeah, that's my only comment.
Yeah, and I think on that same note, the notion, the way you presented it, again, realizing that I wasn't here in 2019 and 20, so I'm catching up with some hearsay, but the reasoning behind going from one model to the next model, because the way it was presented here today is that one costs $320,000 more than the other, And that's not that's not a good message, frankly. So I agree with what Councilor Thompson's saying. There needs to be some more detail put in here as to why and how. The other thing that I looked at was the relatively small revenue out of this. And I know we're not trying to turn this into a profit center, but how the revenue model was put together is unclear to me. So I don't know if this is event driven, meaning we're doing 10, 20 or 30 events out of 365 days, or and the other thing is for me in that revenue side is what's our business plan and our projections. I know we're only taking this out to 2025, but I think for comfort, it would be great to see the business plan on a 2-3 year basis so that people start seeing some cost recoveries over perhaps 3 years as opposed to the single year where we know there's going to be significant startup costs on this. Possible?
Oh, it certainly is possible. I think Phil can enhance a bit more on the revenue question you had related to small portion, small versus what maybe have been in the business plan. I have to remember that the business plan, it was all the revenues going through that building. We're now looking at a model where it's been segmented out as to what is AC's deliverables, which they're still looking to achieve and then some. And then the separate piece of what the town also will achieve. So there's what was in the original plan, we were all intermixed. Now it's kind of separated out. So there's definitely more revenue and more bodies and performances going through that facility than what you're seeing in this budget.
Right.
This is strictly the deliverables the town on its own. We'll see in rentals, we'll see in our own performance or tickets that we sell.
Right.
But ACC is doing a lot on their own. They have upwards of 25 plus shows that they are also going to do. And that is again not identified in these revenue projections. So that's a piece that's not in this puzzle as the report speaks to. That is their business plan still doing their own business under this umbrella. But it's a separate deliverable.
Okay, great.
That's
Good
helpful.
answer. It is.
And then projection beyond, absolutely, we could look at and see where we wish and hope to go. A lot of that will be lessons learned as we open the doors year over year. We'll start to see more positivity. And we're confident we'll do more, but at this stage, it's one of those conservative approaches. Start slower and grow with confidence. Quality versus quantity to start with, really.
Sure. So you build the business. I understand that.
If I might add, thank you for your reference to the cost of the model being 350,000. And it's important to note that, you know, of this 350,000, 80 of it, if you will, is just inflation on 720. If we did have the MSP model, we'd be saying it's at least probably 80,000 more today because of inflation for 5 years, 4 years. And another 160 is just operating expenses. So that's just adding 12% more square footage, a glass bridge, heating. So it's a good point that we'll actually identify in the report that 250 of the ask is completely unrelated to the model. And when we were looking at the notes, we actually took from the MSP model, we actually took 245 out of the revenue. It's combined revenue, assuming that that's ACC is going to do something, which actually creates an even bigger deficit. It's 484. So we would have been asking. We just purely took inflation, operating expenses that were going to go up, the revenue that now is not, we're not going to get because it belongs to somebody else. We would have been here asking for 484. Our position as a team was that was unpalatable. We needed to squeeze it and get it down. And so we completely looked at a different work chart. It was not even, it's not like we took 1 or 2 positions out of the MSP model, save a few bucks. We just said, no, we can't do it that simple. We can't ask for 484. And Phil got it down to 350 by looking completely differently at the structure to get the building up and running and operating. Actually asking that.
Right. Since you brought up the ACC, does this affect the service agreement that we have with the ACC? And have they been, have they had the discussion with us about this budget, this plan? And are they really clear about what their role is versus our role as the other partner in the library?
So,
Through you, Chair.
yes, through you, Mr. Mayor, we've had lots of discussions for 2 years with the ACC, and we have not been able to come to a place where we could all look at the final result and say, yep, we believe this is the best model for the world. That's mostly because there was a difference of opinion about what resources were needed to run town square facility. And the gap was so wide that the purposes of moving ahead and getting to those discussions about what, if any, changes occur in the cultural services agreement, we needed to bring this down to the sort of the bare minimum in terms of renting it out, heating it, keeping it clean, being able to use it for the community, use it for our events. What is that going to take? So right now, this model that Phil has developed assumes that the cultural center could, whatever they were doing the day they moved out, construction started, they could come back and start doing the exact same things. So it doesn't allow for them to grow, but to make better use. But it's tough to figure out what that incremental difference should be and what the value of it is for what we get. We've taken it back sort of the first principles. And so this assumes that whatever the cultural center was doing the day they left, when they move back in, they can do all the same things in a new facility, twice the capacity for seating, no costs for that stuff. That's provided. So we grow from there. So in the purest sense, the cultural services agreement would just stay exactly the same because they're doing the exact same list of services they were doing prior to the building being built. That's not, I think, where anybody wants to go. Obviously, but the kind of investment that is being made overall, there's an extension of those cultural services. So the next iteration of this will be to decide how quickly we can build a cultural services component that the ACC delivers and at what cost, and how do we phase that in?
Yeah, because sorry, thank you. Another, if I may. The third bullet on the not-for-profit hybrid model says that the ACC continues to provide base programming. So that's your comment is that when this opens on day one, everybody's doing similar things as they were doing before in a bigger space, which should mean that, and I'm only going off because I want people to hear what we're saying, because it'll be important. People will be watching are seeing is that basically we have far more community space to be able to use for town programming until the ACC gets ramped up and they start asking for more space to do more things. Is that kind of the way it's going to work with them? I mean,
Mr. Mayor, the question is how much do they want to do when you open the doors? How much more do they want to do the day we open the door, and at what cost? And is it a case of build it and they will come, or is it? So that's what's unclear. We initially set out to come with a model that said, don't worry about who does what. Here's the incremental add that's going to have to be made to the 720. But don't worry about it. Here's what you're going to get for that. And here's the programming, and here's what, how, the cultural service agreement changes, and they're going to be more, and who's going to do what. That's how we originally set out to do it. But we've been through 2 very detailed iterations of that process. And the gap was still significant in terms of the resources that the cultural center felt they needed to build out to that plan that you're talking about in terms of. So this assumes that we're going to do that incrementally, because there is a lot more space. And right out of the gate, the cultural center can certainly do more, and they probably will need more resources to do more, because if they're going to operate across twice as much space, they might need some more resources to do that. That's another discussion about how much we want to do at the start and how much we can support the fund at the start.
Yeah, through you, Mayor. So the message here is that there's the cultural services agreement in the short term prior to an opening, then there'll be a business plan that is going to be identified where these resources are going to be provided to the cultural center based upon their normal budgeting principles and the ask of the town and the outcomes. But right now, this doesn't include that, those resources. Okay.
That's correct, and the reason we had to sort of, mark this point and move forward is we have another budget coming and we're doing a 3-year budget, and we had to get something on the table for council in the fall of this year that says this is what we know we're gonna need to operate this facility, which is gonna go pretty either at the end of 2024 or end of 2023, sorry, and so we needed to get something into the budget, and we couldn't just keep playing with what the cultural services landscape might look like later on. The gap was too big and we had to get something in the budget. But there's lots of room for cultural center to further explore what extra things they want to provide and at what cost, and make that, and that's where it would be reflected in the cultural services.
Yeah, and the bullet says opportunity for ACC to expand the services and all the rest of it. So it's not, the door's not closed, but it's just not in this particular budget that you're talking about here. I need to ask another question because I'm not familiar with what has gone on in the past, but I don't see anything in here about where the donor money is. We're going to have a donor recognition this week or next week, but the money that has come in from sponsorships and donors, where does that reside in this budget or in the plan in general? Anybody have I'm sure somebody knows where it is. I just want to find out just for my own edification. Through you, Chair.
Mr. Mayor, I can start and say, so that money council said would go towards capital. They didn't want to go towards operating at all. That position was taken earlier. So right now it's just accumulating. There was a draw that was done on it for the extension. Contracts for our consultant services. And a bit of room for change over contingencies, but the rest of that still sits unallocated.
Yeah, essentially capital.
And through you, is that public? Do we know what that number is?
Yeah.
And it's available somewhere?
Mr. Mayor, the number is public, not the breakdown, because we didn't want to show our consultant to everybody how we've allocated funds to the external looking for it.
So I think maybe Ron's asking that as far as the actual donors.
Oh, that
The actual donors are all public.
Well, I was going to follow up with
Okay.
donors too, so thank you, but that's really what I'm after is, we have a big number of what this costs. And we have a certain budget for that, and now the success of the sponsorship program is paying that down, is what you're saying, but there are additional costs that are put into this, and that sponsorship money through you is being used for additional costs to it, as well as paying down what the original budget was.
So, Mr. Mayor, the original financial model for the project didn't include any money at all for sponsorships. So every dollar that comes in was incremental to the business plan or to the financing plan. We have drawn on a piece of that money for the expense that came up during the project. Otherwise, it's unallocated and it wasn't expected to pay down the actual building, the initial funding of the project.
That's it for now. Caught up.
Second.
Yeah, just a couple things. One, I think it's important to note, campaign 2 round is ongoing, so
Sure.
hopefully there's still some more dollars and as it is closer to the date, probably will. Through you to, I guess, Bill, Bill, in the operating square budget that was presented, it says last existing improved museum archive facility needed $491,000. Are you able to provide any more details? Like, is that, just staffing, or is that maintenance, or a little bit of everything? Like, what is the 491?
Sure, through Mr. Mayor. So the 491 is 320 something of it is for the museum and archives. So that's the funding that the annual allocation that they get from the funding archives. The rest of it is what is existing for what is already in Doug Bertrand's budget for facility maintenance for 22 Church Street. So that's how that is about. Pardon me? We didn't include the library in this. So the library actually, so the facility maintenance budget for the library is around $370,000. For 22 Church Street's about 190. So based on a conversation that Jason and I had, we just included for 22 Church Street, thinking that the library would be, a separate entity. So it's basically 2/3 of that is for the museum. The other is for facility maintenance.
And Ron raises a good point in regards to cost recovery, and I think it's important as we expectation, because proposed all in this model essentially, we pay all the expenditures and we put in all the revenues, so it's a much clearer way to look at cost recovery. Shared model, sharing the revenue, not necessarily sharing the expenditures. For example, facility maintenance, that's my model. Area of your revenue dollar, what gets allocated to these different components, but here we're sharing revenue and but not necessarily sharing expenses. So somehow that message also needs to get across in terms of managing the expectations when it comes to cost recovery, because it'll never be zero. Because, that fact that some of the revenue is there. I think for yourself, if you look back in the 2019 plan, the current one, a lot of this has changed, the revenue identified in the early plan was $800,000. User perspective. The proposed one that Bill was presented is $300,000. That was part of my question about the bill too, is, we've got to show that, the difference between them, whether it was an overestimation or not. But in theory, maybe that $500,000 is being picked up by our, but they're going to need space. And so, that's how do you factor all that into the financial outcome of it? Well, somehow we got to figure that out, but it always starts with managing expectations and making sure that they understand that, if they just look at the bottom line, strictly from the town's perspective, well, it's going to have holes in it because it's not capturing all of the data from our potential partners to really show the cost. Lots of things for you to try and fit into that.
Through Mr. Mayor, I would, and this is great because it is a first sort of kick at the can, so to speak, to give us some, real-time feedback. And we always knew that this was, as the CEO said, sort of a marker in the timeline of coming up with the budget. So it's kind of, as much as we did, try to condense our thinking of the last 2+ years into this report, but of course, we have, spreadsheets showing how our revenue projections have come up, we put those together, what the ticket cost for a show will be, what our tech cost, so we can definitely expand that. And however we want to present that to council, we'll certainly ask Robin and Doug to help us with that.
Yeah, and on that same note, looking at the number of events that are being planned, I think is important, because we're not planning many right now because we're taking that conservative approach of, I don't, do you know what the number of events that is in this budget that you identified?
Sure, through you, Mr. Mayor. So in the budget, we've identified, so the cultural center, again, which is in this budget, have about 25 performances in their performance hall over any given year. The town is going to put on 12 additional ones. And so we're going to spread those out. And again, the programs and performances we're going to do are not going to duplicate what the cultural center is doing. We're going to focus on education programs, education performances. We're going to be able to do things like stand-up comedy, which is a niche that nobody's filled at this point. So it's 25 plus 12. Plus, we want to make sure that we leave a lot of room for a lot of user groups in the community. We've had tons of conversations with Sports Hall of Fame, with Marquee Productions, who want to move a lot of their programs and performances over to Town Square. So in addition to the 25 for the cultural center plus the 12 for the town, we anticipate there's going to be a number, probably double that from the community as well.
Right. So getting back to Michael's comment, it's much far better to say we're going to have 37 instead of make expectations of 60. If you hit 60, then you're a hero and everybody's real happy about the revenue projections. Whereas, but I think it's wise for us to have some KPIs, some targets on the wall. That's why I'm suggesting that we do a 2 or 3 years out, because it just looks a lot better that we're working in those directions as opposed to thinking that that's the status quo.
Yeah.
And also. They'll be asking for more time, more resources, for no things, which is a good thing, but. So, thank you, that makes sense to me.
Good comments, guys. Questions, under promise over deliver. Okay. And I want to thank Doug, because I know that, we talked about it earlier. I think it's important that council as a whole gets that breakdown of that 350. Instead of just seeing the 350 number, get a breakdown of what that 350 is. And I think that that's valuable information for everyone sitting at the table. So thanks, guys, for your comments and questions, and I look forward to continuing the discussion along with the council table. All those in favor? Opposed, that carried. Next one,
My pleasure.
memo from Project Management Office regarding town's major capital projects updates. Doug? Want to do this one? Sorry. This one.
Maybe.
Project Manager, town's major capital project update. You want to do this, or
Oh, you know, I don't even have it in front of me. I'm so focused on-
Rachel, did you want to do this?
Sorry.
I guess I will do this.
Thanks.
There's one
Be
project
prepared,
that
Mr. CEO.
maybe we should make Phil stay.
Yeah.
ATS on here.
Jump straight into. Yeah, I should say that.
I mean, it's up, I mean, do you want just questions? Do you need Rob, Rachel to go into things, or you want to jump into questions?
Fine.
You want to jump into questions?
Yeah, I read through it,
Okay, Michael, you got any questions?
Yeah.
Go ahead.
So.
Actually, wait, before I do that, can I just get a mover and second? Ron,
Just pick
Michael, go ahead.
Town Square, so it says on, the last paragraph of the item that talks about that there's still approximately 19% of the project scope remaining. And so, you know, I think about how long it's taken us to do 80% of the project. And I extrapolate the other 19% out, and it doesn't seem to me like we're gonna be done by the fall, just the 19%. So I'll give you sort of comment on that in terms of the 93%, what it is, and the reality of being able to, you know, have total completion by fall of 2023.
Mr. Mayor, so it's a good question and one that we've labored with as well with our project management consultants. So the 19% is based on cash flows, and so there's the 19% that, you know, is not spent yet. And so, yes, in order to achieve completion, substantial completion by October, they would have to pick up the pace in order to go through another 20% of the funding in that time period. Now, it's a bit of there is a lot of money that's spent in the final stages. There's some big ticket items that don't come in, like the stage, the portable stairs, some of the pieces for the bridge itself. So we don't expect that we don't think that we just apply the same burn rate of cash and say, oh no, therefore it can be done in January or February. Based on the same burn rate, because there are some big ticket items that skew the cash flow at the end for the draws that they were making. But at the same time, our project management consultant, Colliers, does agree that they're still being optimistic with the end of October completion. And so Colliers is telling us that we shouldn't be counting on mid-December.
So just to confirm those timelines, in the report, it says substantial completion by the summer of 2023 and total completion by the fall of 2023. Those timelines still accurate? I can't see the summer of 23 for substantial.
So I think, yeah, I guess the term substantial completion, I think it might end up being the complete right term, but that was when we were in there putting in technology. So we have our staff in there and we're getting up to the facilities, the technology of bringing the facility. To me, substantial completion is that you're pretty much in there setting up offices and things, but you haven't turned over the building. So we think that we will be in the building for sure in September, in the fall, or like late August, September, setting stuff up. So it's moved from a pure construction site to one that we're actually got some work going on in there. And the final completion where they sign off and done is the one that they said was the end of October. And we're saying, no, it won't be that optimistic. We don't think we'll have all of the deficiencies done, all the things we walk around until mid-December. Those are the ones that we're currently working on at the present recommendation of the Colliers.
So this is fine, maybe it's gonna be the end of the year. Yes.
So that was it. My other question had to do with the financial project, the financial system. In the report, it talked about expected completion for phase 3A, the implementation of most system modules by May 31st, 2023. That happened?
It happened.
Yeah, there we go. Perfect, wonderful. That's for my list of questions.
Ron, Saturday?
The only one I had on the, on Town Square was the paragraph before is it's inevitable that, but we don't have any idea of what the budget overruns are going to be based upon the, post-project claims. Do you have an idea of that? Is that just ethereal?
Mr. Mayor, we know that there's a delay claim coming. They contemplated spending one earlier and ran into the same issue with the Armory project where the contractor was contemplating putting in a delay claim. Our recommendation was wait till the end. We know there's one coming. It just makes it cleaner to when the project done and you're walking around to the building where you know how much pressure you want to apply to defend the delay claim. So we know there's one coming. We haven't been given an order of magnitude. Colliers has taken some rough stabs at it, but I don't want to use those numbers because they're just Colliers estimations, and it really is up to Shandos to decide what things. It will be considerable back and forth because it's not as linear as just taking the date and then extending the time that they've been on the site and then making a claim. They acknowledge that many of the delays were that they're responsible for. Some other delays due to the market and so on, they need to be held responsible for the normal construction scenario. So there'll be a mix.
Can I just suggest that we take maybe a little bit more of this conversation offline, just to make sure that we obviously don't want Shandos people listening in on what we're having conversations in regards to a delay claim, so.
That's all I have, and I have nothing on that reserves.
Perfect. All those in favor? Opposed, that carries. Next, reserve management policy. Join.
I can give an introduction.
Sure, give a little introduction and I'll ask for more.
So the reserve management policy is one of the items that was recommended as part of the fiscal strategy. So this relates to the reserve management pillar. What this policy effectively does is it documents what we're already doing. So it documents a lot of the practices that we're already following to make sure our reserves are maintained in good health and that our capital plan can be adequately funded and supported. So it's just putting it down in paper and documenting the process overall.
Looking for the recommendation. Ron, on Michael. Comments?
I think, it's probably good, just a little refresher, just to talk about the graph that's on page 2, which talks about the 10-year capital reserve balances. And just in terms of the reserve total and all that information put in, but when I look at that graph, what it says to me is that in 2022, our total reserve balance was $100 million. And when you take our 10-year capital plan, our asset management, and you pay for everything that we are anticipating, not approved, but just anticipating, and you factor in all of the revenue we expect to receive from the various projects we assume will come online, build this up. At the end of the day, if we pay for everything that's in our books right now, 10 years from now, our reserves still at 60 million. Is that a fair simplification?
Through you, Mr. Mayor. So that's a fair simplification because this is actually straight out of the budget binder. And this reflects what we've assumed for revenue goals. So whether it be tax or rate revenue going into reserves, development charge revenue going into reserves, and what our expected draws are based on the current 10-year capital plan. The thing is with some of our assets, as you know, they have a life cycle much longer than 10 years, particularly water and wastewater assets. And we're going to see a lot of high needs for replacements in around the 2050s. So that one reserve is the one that you're going to continue to see to grow over time. So we have the funds available to replace those assets when they do happen, because they're quite costly assets to replace.
Yeah, and I think that's, and I know that you're working on that to try and give council a better longer term view, and as we talked about briefly, because sometimes, you're booking an expenditure, big project, let's take Town Square in a particular year, but really the life cycle of that asset is 50, 60 years or whatever. So you're booking the whole cost at once. even though, it would be good to amortize it over a long period of time and take a longer view at it to better assess the viability and the affordability. So, I think the work that we've done here is, in terms of the policies, everything's great. My only little piece I would say is that I noticed there's like asterisk beside the hydro reserve fund. Yeah, it's my own personal perspective that hydro reserve fund will not be around in 10 years. I still hold firm on my belief that that asset is build another asset. The documents from that time, that really was always the intent of the hydro reserve. So my own perspective, there's a couple assets we're building that I would see as that hydro reserve. We have that debate when the time comes. That's just one opinion.
Ron?
Similar kind of question, but and I haven't had a chance to really dig into each one of the lines that are in there. But my question to you is one of risk in terms of our reserves. What reserves do you believe we have the greatest risk? Pardon?
Risk of what?
Of just our financial risk of it being depleted. So we talked earlier about the graph when we were talking about the SARC, for example, and because these are different pockets of money that are used for different things at different times. So through you, I'd just like to get a little idea of where our risk is financially in these reserves.
So the biggest risk that we have in our reserves is development charges. Main reason is they're market driven. So if the growth doesn't come or it gets delayed, then our collection of development charges also will decrease. So it's very much tied to the growth. There is an information report that went out today that identifies for development charges that over the last 5 years, we collected just under half what was in the study because growth was lower than what was expected in the study. Doesn't mean the growth's not coming. It's just a matter of the timing of when it happens. So that's probably where the riskiest area is. But the thing is, with development charges, we take a very conservative approach to when we do our forecast. We don't just take what's sitting in the study. We actually look at what the trends are and what we're looking at moving forward. So we assume less revenue or more realistic revenue targets to begin with. And we've actually been pretty close the last few years in our assumptions for our forecast. The other area that's a little bit of a risk area is the tax funded asset management reserves. A lot of that will come out in the asset management plan work that's going on over the next year or two, and council will get more information on that. And council get to make informed decisions because that's a revenue source that council can control. So we can look at setting the service levels for assets and determining the appropriate contributions we want to make from a tax funded reserve.
Yeah, well, you answered the second question I had. The risk and then how we mitigate the risk. So thanks for that.
So just along those lines, you touched upon the DC charges, the DC study. So Ron used the example. Sorry. When we did the DC charge study, we factored in the potential build of the SARC, probably the prior cost. So because the SARC, even though we're going to build it, is an asset that's going to last a long time, how do we ensure that we collect full amount through development charges well past that 10 years?
So through Mr. Mayor, in developing the DC study, we are going through and we're working on our next one currently. So for projects such as those, we take a reevaluation of where things stand. So right now we're behind on the growth that we had in the previous study. That will get factored in as we start the next study, because there'll be a number of projects that didn't get completed will get pushed forward. The SARC, we did have 9.5 million of DC funding identified in the study. With the cost of it increasing, it may have been a bit more of a scope and possible more growth. It's an opportunity to potentially put the additional in as a post-period benefit that will, because it's going to benefit not just the community in the study period over the next 10 years, but in the future as well.
So if we look at, sorry, we say, the gym, but if you say another 25-year life cycle or 50 years, can we continue to extend out that cost so that at the end of the day, however long it takes, we'll recover the full cost through development charges?
Through you, Mr. Mayor, so it all depends on when growth comes, right? So it's all dependent on that. There's also one of the bigger changes to development charges right now is the studies can last up to 10 years. And we have to phase in increases over the first 5 years. So there's been a lot of legislative changes that we're working with, but we always do that reset at the beginning. So if, we have another period of time where we're not collecting as much as we expected because growth isn't coming as fast as we expect, it gets reset as we go along as part of this, the study continues on.
That's why we say sometimes growth should pay for growth, but it doesn't always do that.
Kevin? So that carries. New business? Ron? Motion adjourned. Michael? Favor? Opposed? We are adjourned. And bring the gavel in.